accounts, I could just transfer a little bit of my gold to him, and that I've just paid. And nobody has to see each other. No one has to be in the same room. We just transfer ownership. But, the government regulators are making it hard for gold money to do that. Now, I know a lot of people say, but Peter, if you do that, you still have to trust a third party. Fine. Gold money competes in the market for reputation. Get the government out of the way. There'll be all sorts of gold monies out there. All sorts of companies will compete for reputation of being a safe storage place, just like banks used to be. Before the Federal Reserve, banks competed on reputation, and everybody knew who were the solid banks, whose notes you could trust, who had the gold that they said they had, right? I mean, they had good balance sheets. So I am willing to trust a third party. Capitalism is about trusting third parties, because to win my trust, they have to have a good reputation. And once you build up a good reputation in a capitalist economy, that reputation has tremendous value, right? One of the quotes of Warren Buffett is that, it takes a lifetime to build a reputation and a minute to lose it. So once you've created a good reputation, you have a vested interest in maintaining it. So I have no problem with trusting an honest third party that is competing to maintain the value of its goodwill and its reputation. What I don't trust is the miners. I don't trust Bitcoin at all. I don't trust third parties that I've never met. I don't just trust money I can't touch, I can't see, no substance in cyberspace, just thinking it's always going to be there, believing that these miners are always going to be there and not change the rules of the game. These things are constantly forking. And the whole thing is a bunch of nonsense. You have to have the ultimate trust to put your trust in Bitcoin. And of course, the whole concept is trust. I don't have to trust gold. Gold is real. I know what I can do with my gold. I own gold. It's mine, right? When you own Bitcoin, you have to trust that somebody else is going to want it in the future. I know that everybody's going to want gold in the future because they've wanted it for 5,000 years. And if they don't want it, I can use it for stuff. I can do things with it. Gold is in everything. I've got a cell phone. There's gold in that cell phone. There's gold in a lot of products. And who knows what products will be invented in the future that are also going to need gold, because it is the most valuable metal that we have on this planet. And there's going to be demand for it. So Bitcoin is all faith. You have to have confidence and faith that somebody's going to want your Bitcoin, even though there's absolutely nothing that you could do with it. It has no real intrinsic value of its own. The only value it has is somebody will buy it from you. You hope. That's your trust. That's your confidence. And that the miners will be there to maintain the network, which they may not. Anyway, next question. From Tuays, how do you see the pound doing against the dollar? Will the trend reverse? Look, I think the pound is going to rise against the dollar. I think it will fall against gold, but I think it's going to rise against the dollar. Is the pound my favorite currency? No. But I think that if I had a choice between keeping all my money in pounds and keeping all my money in dollars, I'd pick pounds. Now we don't have to make that choice, but if that were the choice, that would be what I would choose. Okay. Sprash Pomermu. My 401k in money markets have maintained nominal value. Could the repo madness be an incentive or trouble for the money markets? Look, the main trouble for the money markets is the money, right? The currency that's in the money markets. I don't think the money markets are going to break the buck. I don't think that if you have $100,000 in a money market, I don't think you're going to wake up one morning and you only have 90,000. Now, it's possible that could happen. And if the government did the right thing, it probably would happen. But since they're going to do the wrong thing, I think that they'll make sure that you always have that 100,000. But what they're going to guarantee is that 100,000 doesn't buy you very much. So what I would do is I would get the money out of the money market unless you need it for something in the short run. But if it's long-term money for your retirement, I don't think you're going to retire on U.S. currency. I think the U.S. currency is going to retire before you do. So you should be transferring that IRA over to your Pacific Capital and let one of my representatives build you a portfolio that I think will withstand the dollar crisis that's coming. Or maybe you can buy my funds there. If they're on the platform, you're able to do it. But anyway, Euro Pacific Capital, Europac.com is our website. Jim Dodd, if you had 30% of your net worth invested in U.S. bonds, would you invest that 30% back into the gold fund or other mutual funds? Look, I wouldn't want to keep 30% of my net worth in US bonds. Now, you might want to do that. It depends on how much you trust the value of the US dollar. Personally, I don't trust it. But I mean, 30% is not terrible. I mean, if you lost the entire 30%, I mean, if you had 10% of your portfolio in my gold fund and the 30% that you had in the bond fund became worthless, I think that the value of your gold fund would increase by much more than what you lost in your bond portfolio. So I think my gold fund is a very good hedge against a bond portfolio. So that's one way to look at it. Okay, I got 30% of my money in US Treasuries or other bonds, but just in case Peter Schiff is right, I got 10% in his gold fund. And if you end up losing a bunch of money in my gold fund, it probably means that you didn't lose the 30% that you had in US Treasuries, right? But if my gold fund goes up 20 times, that probably means you're pretty much wiped out on those treasuries, but you might not care because you made so much money on the gold fund, even though you had a smaller percentage of your portfolio there, it went up by so much more. Now, of course, I have other mutual funds that may even be more appropriate, that are less risky than gold stocks. We get a lot of dividends. I have a dividend payer fund that invests in good dividend paying stocks in countries that I think are in better shape. My value fund. So I have some mutual funds. Read the prospectuses, understand the risks. But yeah, I personally, that's what I do. I mean, I'm creating funds that basically replicate what I would do with my own money. I'm telling people to do, things that I would do. Now, of course, not everybody is in the same financial circumstances as me. So people, will choose to implement my strategy in different ways, depending on what's the most suitable for them. But I think that there's pretty much a place in everybody's portfolio for some of what I'm doing. The question is, how big a place, how big a spot do you want to make for my strategy? And again, you can decide that on your own, or you can work with one of my representatives who can help you. Because see, I'm doing this a podcast or video on YouTube, and I don't know the specifics of anybody. And so what you need to do is, before you invest any money anywhere, you talk with one of the reps at my firm or someplace else who knows your circumstances exactly and who can make recommendations that are tailored and suitable to your specific needs and your objectives. Peter, this is Venom. Have you heard of Ripple? Of course, I've heard of Ripple. I've heard of all these altcoins, or not, obviously not all of them, because there's 5,000 of them more. But I've heard of all the big ones, right? All the top 20 coins. I've heard of those. And so, what do you think about replacing those? Look, I don't think any of these cryptocurrencies are going to work, right? I mean, there could be some that are better than others, but I think they're all flawed. So I don't want to gamble on any of them. I would rather bet on gold than take a flyer on any of these cryptos. Now, did people who bet on these cryptos 3 or 4 years ago make a lot of money? Yes, they did, if they sold. If they haven't sold, they're probably not going to make anything if they never sell. But just because people made money buying them in the past doesn't mean you can make money buying them now. In fact, the reason that people made money buying them in the past is because so many suckers have bought them now. So the people who are buying now are just paying a lot more money than the people who got in early. But the question you have to ask yourself is, who are you going to sell to? Who's the greater fool that's going to pay an even higher price than you did? And if you can't figure it out, well, then you're the fool, and you should get out before it becomes more obvious. Okay, next question. Longtime follower, would you advise trading out of GDX to buy physical gold? Not now. I think the gold stocks are much cheaper than the physical gold. I would consider going the other way around, getting out of gold into the GDX, or more specifically, getting out of physical gold and getting into my gold fund. Now, would I sell all my gold? No. I'm talking about a portion of your gold. If you don't have any gold stocks and all you have is gold, you can use some of your gold to buy gold stocks, preferably through my fund. You can also use some of your gold to buy some silver. If you only have gold and have no silver, given the exchange rate right now between gold and silver, you've never been able to buy more silver with your gold. So buy a little. You can call up Schiff Gold, work with my guys, schiffgold.com. We will buy some of your gold back and sell you some silver, right? And we're going to give you a lot of ounces of silver for every 1 ounce of gold. And in the future, when the ratio goes the other way, we can buy back that silver from you, and you can buy gold. And hopefully, if I'm right, you'll end up with a lot more gold, right? Let's say you take an ounce of gold, right? And then you get 100 ounces of silver.